Priya Lakshmi. I'm the Chief Revenue Officer for our UK business. A very quick introduction to GFT for those of you who don't know us. We are an AI-centric digital transformation engineering services firm with very, very deep expertise in financial services.
So thank you and welcome everybody. I'm Ruth Chambers, Client Partner for Capital Markets at GFT, and I'm really excited to host today's panel where we're going to be talking about the accelerated settlement timeframes for the UK market. I'm joined by a panel of experts today, which is fabulous stuff. But first and foremost, what are we talking about? So the UK is committed to move to T+1 settlement in October 2027. Which means that we're going to significantly reduce the time that firms have got to go through a number of critical processes before actual settlement date. So we'll be exploring some of the themes from that report as we go through. But first of all, let's introduce some of our panel here today. So we have Nikita Postlethwaite from Genesis, the resident post-trade expert. We have Will Windsor-Sal from Redburn Atlantic, who's going to be representing the brokerage community and expert in sell-side technology. I also have Bill Meanahan on the panel as well today. So Bill's on the task force for the UK and is also our expert on standard settlement instructions. And we have Linda Gibson as well from BNY Pershing, who is the expert on regulatory change. So a big welcome to the panel. Really excited to get started off as we start to explore some of the key themes that the report is going to show. So perhaps if we could start with Bill, maybe you could kick us off and start to talk a little bit about the state of play in the UK today as relates to the task force.
Yeah, sure. Hi, everyone. Some of you will know some of this already, but the UK started a couple of years ago looking at T+1 and in the early part of last year made a recommendation that the UK should move towards T+1 and initiated certain work streams to start looking at the detail of that change and what needed to be put in place. So if we fast forward to this year, then we've already seen the report issued. That's now, I'm not allowed to call it a report, actually it's an implementation guide. So there is a strong call to action there to start looking at the process change for T+1. So that was published a couple of weeks ago. There was a big kick-off last week as well, which got significant backing from the Treasury, from the Bank of England, from the FCA. So there's now a lot of focus on get ready, get started, the move to T+1 is happening. And the date they've recommended is the 11th of October 2027.
Brilliant, thanks Bill. And Linda, perhaps you could share some thoughts around the differences between what we can see in the UK from a readiness perspective and the current state of play across Europe.
Yeah, afternoon all. So the EU have started their implementation a little bit later. Last quarter of 2024, we saw 2 reports come out from ESMA regarding their preparation and their commitment to move to T+1. And then more recently, they actually committed to a date, and they were the first party to suggest the 11th of October 2027. And they've actually hard-coded it into their legislation, so it's quite a bold move. They're going for that date. They are working very coherently with not only the UK, but also the US regulators, and they are willing and looking to kind of adopt best practices that we've seen from the US migration and also where the UK is over the last kind of 18 months to 2 years. So they're getting themselves up to speed quickly, quite ambitious. They're looking to have a roadmap published at the end of Q2, so just 4 months' time. So the individual work streams were set up in February. BNY, we're a co-lead on the scope work stream, and we're participating across the various work streams and in the UK. And you're seeing that with a lot of firms. It's not UK or EU. They're working across both jurisdictions because everybody wants alignment on this date that we migrate to 2027.
Brilliant, thanks Linda. So that's what's happening in the UK and Europe. Maybe if we take a moment now to have a think about what's already happened in the US. So there's obviously they've already moved to T+1 settlement. And I think there is obviously some lessons that can be learned from those experiences. So Will, perhaps you could start us off by talking about some of the maybe the unintended challenges and some things to think about from the US migration.
Yeah, I think for us it's less about unintended consequences, it's more very predictable outcomes. That yes, sort of a lot of firms made it in time for the regulation, but And sort of it's all the ones you expect to still have manual processes, to not be sort of doing things as efficient as they could, are exactly the ones that aren't quite there, that they've managed to kind of get there on time, but they haven't fully automated, they haven't got all of their processes properly in place. So even if day one they're able to set a T+1, we do then still see more fails and sort of more problems further downstream. So it's really kind of lack of preparation and not being there, not being fully ready and just kind of hoping that you can get away with it. And so really my lesson for this is start planning early, get your systems in place and kind of make sure you know what you need to do well ahead of time rather than trying to sort of patch it in further sort of at the last minute.
Yeah, makes sense. And Nikita, how about from a Genesis perspective? Obviously you were helping a number of clients get themselves ready for T1 in the US.
Yeah. Sort of similar to what Will was saying. You know, you're only as strong as your weakest link, right? So it's okay if you've got yourself sorted, but it really is about sort of communication and making sure that that whole value chain is as efficient as possible. And you know, we've seen things with our clients that, and obviously reports, that, you know, around about 50% of asset managers are now reporting issues with SEC lending, operational difficulties, sort of increased shortage of funding, increased staffing costs, increased failures. So, you know, it really is about that whole value chain and making sure that everyone's as efficient as possible, but also having sort of ways to clearly identify where those issues may be and having sort of clear and coherent resolution strategies, dashboards, better integrations to systems, all of that kind of stuff. So, yeah.
Yeah, makes sense. So I think that's quite a good segue. So let's focus now back in on the UK specifically and some of those areas that the task force called out that firms are going to need to look at. Some of them have already been mentioned here today. So that's settlement, static data, stock lending, and market infrastructure as well. So Linda, maybe you could start us off by talking about some of the hurdles that firms can expect to see from an infrastructure perspective.
Well, I think the complexity of the European market is the first thing to call out. We've got over 30 CSDs, multiple CCPs, we've got multiple currencies and multiple languages being spoken. And whilst it all seems obvious, the languages and the currencies, it's just more factors to deal with. And I think the UK migration is going to be more like the US, single currency, one CSD. It's going to be far more straightforward. So we all need to be aware of the complexity of the European market, and that's one of the things in this roadmap that we're expecting to come out at the Q2. They're going to call out any significant issues around the financial market infrastructure, and we'll be looking for input for solutions. There's various comments around whether there should be more cohesion across the FMIs. But with that timetable to work to, it's more around working out scalable solutions to these problems. And we might see some more headlines, there's some today about potential mergers, but I think we've got to work with the legislation and the structure that we've got at the moment.
Thanks, Linda. So moving on to the next area of focus from the report. Bill, what are some of the things we should look out for from a static data and SSI perspective?
Yeah, we speak to lots of firms around SSIs, and not many firms have got a great process around it. Some of it because of their own systems, others just because of who they're transacting with. But we generally hear that in terms of SSIs, clients have about 60% of their SSIs that are automated and 40% that are manual. So that is something that has to be dealt with. The recommendation in the implementation guide is that they are automated. And they referred back to the Financial Market Standards Board, who did a lot of work over the previous 12 months, and they've come out with a standard. The core principle one is that it should be automated, but if not, then it needs to be in a particular format, so that's their core principle two. But there's other things in there around managing the data. So what we are looking to do at Simple is put that process in place. We are working with a custodian now where we are going to fully automate them, so we have all of their SSIs. We're able to share that with all of their clients electronically, and from there they can share that electronically with their counterparts. But we also deal with third parties as well. So our first reselling client was Equilend. So we've got their security lending SSIs in, which again will help with the T+1 move. So that's what the call is. It's to get as much of that data automated as possible, and over the course of the next 12, 18 months, put processes in place just to make sure it's moving the way it should be moved.
Brilliant, thanks, Bill. And Will, thinking about some of those, those 4 key areas of focus, what are going to be the key challenges for, from the brokerage community's perspective?
I think sort of picking up on a couple of points, Nikita saying you're only as strong as your weakest link, and Linda highlighting the complexity that there is in European markets. A big part of it is going to be communication. It's going to be making sure that your clients are aware of what you need from them, that you're speaking to not only other people that you're going to settle with, make sure they've got the right systems in place, but also your vendors, your system providers, to make sure that they can support what you need. So from our point of view, we'll very much be focusing on streamlining our own workflows. At this point, we can already identify where there are potential breaks, where there's manual input, that if we need to take in automated SSIs, can our current vendor support that? If they can't, do we need someone else? That 2027 is a long way away, but if you need to budget in 2026, then we need to start thinking about that now, potentially 12 months to then actually integrate and test. It's not as long as you think it is. So for us, it is about communicating with as many people as we can to sort of understand exactly what's going to be required.
Yeah, thanks, Will. Nikita, do you have any thoughts around those elements there?
Yeah, just to sort of go back to the data part of things. Obviously, SSIs, rightly so, is very important, but it's sort of looking at your data across the board as well. Sort of data silos, poor integrations, manual intervention, manual inputs, etc. They all cause failures. And so, really you want to be looking at sort of cleaning that data, centralizing it. When we were helping a number of our clients in North America assess their readiness, they'd have fragmented teams, disparate systems, disparate processes, and all of that was just sort of pointing to the fact that you are not going to be able to do this. So, we worked with a lot of them and, in some cases sort of helped them completely redesign that whole process and, rethink it from the ground up. So, yeah, just to reiterate what Will's saying again, start looking at it soon and be prepared to make some big decisions and changes, yeah.
Yeah, definitely. So I think that, we've spent a little bit of time talking about some of the challenges that firms are going to be facing from various different aspects. So let's talk now about how technology can help us to overcome some of those challenges. Nikita, perhaps we start with you from a Genesis perspective.
Yeah, I think ultimately it's all about operational efficiencies, and there's a number of ways, there's a couple of ways in my mind that you can achieve that. You either increase your resource, your head count, which is costly, it's quite short-sighted, it's not scalable really, or you invest in technology. You invest in technology to, streamline your processes, gain more efficiencies, and ultimately reduce costs and failures, which is key. And I think there are stats, McKinsey stats saying you can save around about 50 to 80% of settlement, operational costs just by automation. So, yeah.
And Bill, how about from a static data perspective? Where can we see some technology advances and automation there?
Yeah, so Symbol's built using a DLT, so we use R3's Corda. I think SSI is a good one that lends itself to a DLT environment, but we've got processes in place with our custodian where we're taking feeds from them on a real-time basis to pull the data in, go through a transformation process, and then get it into our system. But we're also looking at the other end of the scale as well. So nothing announced yet, but in the next few weeks we'll announce a large language model capability that we're looking to bring online to start looking at PDFs, Excels that are coming in manually. But we'll use that information, first of all, to satisfy what the client wants and get their SSIs in, but also look to see who's sending it at the start of the process. So if we can automate it right at the beginning of the process still, that will be always will be our aim. We want to try and make sure it's automated there and we flow it through the ecosystem.
Brilliant, thank you. And as GFT is an AI-centric organisation, I think it would be amiss to miss the opportunity to talk about the fact that we've been utilising AI to drive process automation for a number of years. And with the advances now of generative AI, we're seeing real efficiencies right the way across the software development lifecycle for our client programmes. So we're utilising those tools for Gen AI now across all of the programmes that we're running on our clients' behalf. So we're able to deliver faster for cheaper, which is obviously a great advancement. So I think the other thing that, from an AI perspective as well, is that the tools really do drive collaboration, and there's a number of ways that it can be utilised to sort of advance knowledge sharing. And we're going to come back and talk about collaboration a little bit more in just a moment. But I think we've spoken about a number of things where firms need to take action, but what should firms be doing now? So maybe if we start with Will, what do you think from a starting now perspective? Where should people be focusing?
I think there's two things that you can do right now. First one is get an owner for this bit of regulation to actually keep on top of it and kind of see what is happening with the regulation. That yes, we've got an implementation date, but I can't think of any regulation that was actually delivered on the date that they originally state. Mm-hmm. So we know the goalposts are going to move, we know that it's complex, we know that there are going to be delays, there are going to be changes to the approach, there are going to be subtleties. So somebody not necessarily on the technology side, our head of ops is in the audience and is our named person for us. Somebody who can actually follow that regulation and keep people up to date. That's partly to drive what you do with the technology, partly to help inform your clients and kind of keep that communication up. But having sort of somebody owning that and overseeing it, I think is very important. The other aspect is it's about that technology efficiency. We don't know exactly how we're going to implement it. We don't know how we're going to integrate automated SSIs, but we do know where the manual breaks in our own process are. We do know where we're currently getting fails, who the counterparts that are currently causing problems or not alerting us to the fact we need to borrow soon enough. That is all stuff that we can sort out now. That, you are subject to what other people can do, but you can start having those conversations with the worst offending counterparts, and you can review your own systems and look for ways that you can speed things up, make it more efficient internally. And that's something you can do anytime.
Brilliant, thanks very much, Will. And Linda, from your perspective and maybe from your client's perspective as well, what should people be looking to do right now?
I'd echo that point about look at your own processes and look at your own, the reasons for your current breaks and what can you do to remedy them now. There's a call out for the industry. And I think it will be the October 27 date, just because it's been legislated. We're working with the US and the EU. The US set a date. I think they had a 27 months implementation plan. Where we are now here in February, we've got 34 months to get to T+1. So I think there's certainly at the moment there's a complete drive for that to happen. And you're hearing from Andrew Douglas on the UK task force, really driving why can't you settle T1 now? And some firms can. So start talking to your counterparties and up and down your own chains to find out what trades, who can trade T+1 and start doing that. I think then we'll really start seeing driving through some efficiencies. But a big thing is communication, and that's what we're thinking about, how we start our own external communication with our clients, with our vendors, internally with staff. Across the industry associations, we'll be really active. The industry associations, I think one thing we haven't mentioned is the UK are going to have a code of conduct. And that will be the way that the UK regulators and the exchanges enforce compliance with T+1. It will be a breach if you don't settle an in-scope trade on T+1. But they want to work with the industry. The exchanges have obviously got to change their rule books to reflect T+1 settlement. But they really want industry input as to what the problems are, what the challenges are, and what the solutions are. So don't sit back and then find yourself you're in a mess. And if you find there's a problem that you've got that you're not hearing anyone else has, well, raise it with your with your cohorts, raise it with an industry association, they'll take any issues on an anonymous basis, and it may well be something that will help everyone.
Excellent, thanks Linda. So we've talked a lot about communication, about collaboration. What are some of the kind of the market collaboration and best practices that maybe we could see, Bill, from a data perspective?
Yeah, I mentioned before about the Financial Market Standards Board. They were working on an SSI standard in conjunction with the UK Accelerated Settlement Task Force. But the one thing I really liked about that was when the FMSB published their standard, a few months later the initial report was published and they made a recommendation that that standard is also followed. So they referred back to the FMSB standard. There's similar people going to be on the European task forces, so I would hope that the same standard is recommended, and that's it should be the same recommendation across multiple organisations, multiple countries that are going to be backing that same standard. So I like that from a collaboration point of view in terms of how they've coalesced around it.
Linda, anything else to add on that from a best practices perspective?
I don't think so. It's communication, automation, get moving, get your budget set. I don't know if we covered that already. Budgets really need to be in place this year.
So my question is that I see one of the key differences between the US and Europe moving to T1 as being the CSDR regime. How do you see that affecting the process?
I can take. Yeah. I mean, CSDR is the gift that keeps on giving. There are lots of things to take into account of. So I think all of the things we've been talking about, getting ready, getting the automation in place, making sure your processes are working. The reason that Europe is doing this as well is because of that settlement efficiency that they want to get to. So they have a level in mind that they want to get to, and I think they will use the CSDR threat as something that will remain in place. They're obviously changing the penalties slightly as well, so they're increasing slightly. But I think they're also going to use this as an opportunity to look at what's in scope and out of scope. The one thing that also was mentioned last week on the UK kick-off session is that the FCA were very vocal, and as Linda mentioned, that there is the code of conduct, and the FCA were saying we're going to be overseeing this, we're going to be monitoring it. They did not say that they would not be doing anything that would be more onerous than that. So that's the other thing. With Europe and CSDR is also a UK regulation, it's just we don't have the penalty part of it. That could change.
But I think that point has been raised on the EU task force, as in settlement penalties. Should that continue? Can it continue? And very much want it to continue because it's already established. But we'll see how that one plays out.
Thank you. So what I'm interested in hearing is, where do you foresee the impact is highest? So as I can imagine, some asset classes will be much easier to make sure that they adhere to these new regulations. So do you have a view on which asset classes and which firms will be impacted the most?
We're largely equity focused. So again, I think equities are generally one of the simplest asset classes. But I think I'll let Nikita comment on others.
Yeah, I mean, predominantly it's just cash asset classes anyway, right? But I think there has been some concern around sec lending and some other pieces around that. So I think for the most part, the asset classes that are included in this is day one. I think it's going to be largely cash. So you're looking at fixed income and your equities. Yeah, and I think there has been some concerns raised around bringing any other asset classes in at this point. So I think for this first date, we're probably just going to be focusing on those.
Obviously, we're talking about T+1 today, but dare I ask, is T0 next?
So I think T0, as you rightly point out, it is technically possible. It's whether the industry is ready for it or wants it. I think on today's technology, there's not a chance that we could get to T0 in a smooth manner. But I think if you look at what the industry is trying to get to, they want an efficient settlement process. My personal preference would be to have a way that you could trade and have an option to settle up to T1. If you're ready to settle on T0, the assets were available, the cash was available, that should be a viable option for you to do. And maybe that's where the technology can help with that. If that's your preference, you want to get the cash in or the securities out as soon as you can, then you can do that in the right way. I think it would be a pretty fundamental redesign of the way that the systems work today, and you've got massive efficiencies with netting as well that you'd have to now bring into capital buffers. You'd have to be buying a security to then get the cash back later. So I don't know whether I personally don't see T0 as a priority for investors. I think it is more around getting an efficient process to settle the transactions on time.
Thank you. Hi. You touched on the communication part being key, and we've actually discussed quite various areas. So thinking about it, what would you say would be, say, the first 3 things we should be asking and finding answers to right now? Let's say the top 3 questions that we should be answering right now. As anyone, really. So if you're facing this and you have to start from somewhere, we discuss so many areas of key points. Where would you? What are the top 3 things? Let's say in the next 3 months, you have to have a very clear plan.
I'd say, have you actually started thinking about this? Have you been looking at your processes? Do you know where your pain points are? Do you know, to Will's point, do you know who the clients are that you're most concerned about? Are you speaking to those guys? So again, it's just sort of reiterating what we've been saying, getting people to start thinking, act now, awareness, communication, and have you got a budget as well, right? So again, yeah.
I think the other one, excuse me, I think the other thing that's come out is there's already been some guidance on action areas. So SSIs, corporate actions, set lending recalls. They are 3 areas that they've called out to say there needs to be a focus on these. And I think the second part of that is as you mentioned, it's start now, don't wait. It's such a short time in reality when you go through a whole process. You need to be looking at what you want to do around those items.
I think another question always worth asking yourself, to Linda's point earlier, why can't we settle T1 today? So it is look at what you're doing and what is preventing you from settling T+1. Once you know that, you've got a good idea of where you need to focus your effort going forwards.
And if you're at all stuck for ways in which you need to assess what you're doing today, there are definitely firms out there who can help you doing those assessments of your processes and your technology as well.
I just wanted to ask, October 27 seems quite a long way away, but in reality we know it's not. Is there any actual deadlines that people need to be able to provide data to prove that they're compliant in advance of that brings the deadline forward, sort of thing? Or is it not one of those regulations like BCBS 239 or whatever where you've got to prove data that you're compliant?
I think for the larger firms, the code of conduct will be used. So the FCA in their regular meetings with those firms will be going in and asking for the action plan. And it can't be, yeah, we'll look at that in 25 or in 26. It's got to be, we've got a plan, we've already started the assessment, it'll be finished on this date, then we're going to be implementing ABCD following that. But I think that'll be an ongoing thing throughout the next 2.5 years to make sure that when we hit that date, it should be smooth. There shouldn't be any bumps on that date or the next day for settlement. So that'll be the plan.
Yeah, just adding, as we get into 2027, there will be an industry expectation to test for anybody's facing direct to the market, as we saw with the SEC. So I think we will need to be prepared for that, and firms that aren't either willing, able or test unsuccessfully can expect attention.
And really breaking that time frame down, you've got essentially 2025 to assess and to make plans, 2026 to implement those plans, and then 2027 you want to be ready well ahead of the deadline.
Central counterparties, what, if anything, will they do differently post T1 in terms of margin calculations, margin payments and treasury functions to pay margin calls? Does the panel have a view on that?
I'm not sure they'll do anything different. I suppose if it was a margin call that, I don't know whether there is a margin call that needs a foreign exchange element in there, then that might be more expensive if you've got a shorter deadline. I think everything else, the CCP, I mean, that's the right sort of model to do the settlement part anyway. So hopefully whether they have to amend their deadlines to get data in earlier to be able to do their algorithms and everything else, I don't know. They may change that, but I think that might carry on as it is. I think, from my limited knowledge.
Yeah, I think that's exactly right. I think it would be the same, but just they'll have to tweak things just to hit these slightly different timeframes. But I think as they operate right now is exactly what we need, but they're just obviously going to have to deal with these shorter timeframes.
So in that case, well, let's just do a very quick. I'll do a quick wrap up, because I think we've heard a number of really interesting points from the panel this afternoon. I think the key takeaways really are about planning early, making sure that you're communicating with everybody across the value chain, right? Whether you communicate with your customers, with your peers, with your vendors, with your consultancy firms that help you along this journey as well. So that's absolutely crucial. I think obviously start acting now, and obviously make sure that you're speaking to people out there in the market who are going to be able to help you, because there's a lot of technology out there that's going to make this journey an awful lot easier for us all. So I'll wrap that up there, unless the panel's got anything final to add. And if there are any questions after this, please do feel free to join us for some networking and some drinks afterwards. It'll be a pleasure to continue the conversation with you.